College is expensive. We know that. And as a result, many students do need to rely on student loans to pay for their bill. Now, in the scholarship system and Debt Free Lab, our goal is to teach families how to avoid student loan debt. And we've helped families secure well over $12 million in scholarships to date. So we are well on that way. However, we also realize that many students will need to borrow to maybe close the gap, or maybe they found us late in the game and they need to borrow until they get scholarships. So, whatever your reason is, if you are looking into scholarships, I wanted to talk about a common term that we see that actually doesn't even exist anymore, and that is Stafford. You'll see that term a lot. And so when we're talking about Stafford, the Direct Stafford Loan, this is one of the most widely used federal student loans, or terms for federal student loans, that you will see. Okay, so I want to talk about these so that you know what you and your student are signing up for. Now, make sure you hit subscribe, because every week we release a new strategy to help your family avoid paying student loan debt. Now, again, some of them will cover student loan debt themselves, but most of the time there's strategies on how to prevent that. Hey there, my name is Jocelyn Pearson, founder of the Scholarship System and Debt Free Degree Lab, where we redefine paying for college so that we can build strong financial futures rather than ones where we're paying on loans for decades to come. And again, like I said, scholarships is our bread and butter. That is our main strategy. But we also need to make sure that we all know what we're signing up for if we do need to borrow money in the meantime. So, what are Stafford loans? So, the term Stafford loan actually is referencing unsubsidized and subsidized federal Stafford loans that were given to students before July 1st of 2010. So, this term was technically phased out a decade and a half ago. That said, a lot of people, a lot of institutions still use the term Stafford Loan or Direct Stafford Loan when talking about the money that they're giving out. But what they're really meaning is direct subsidized loans or direct unsubsidized loans. I have an entire video talking about unsubsidized loans. Are they worth it? We will link to that in the description, as well as pop it up here on the screen. You can check that out after this video for more specific details. Now, undergraduate, graduate, professional students, they can all be eligible for these Stafford loans or direct loans in different capacities depending on their financial situation. Now, in order to receive access to this money, your student and you have to submit FAFSA. This is a federal application. It's completely free. It's a .gov website. And in fact, actually starting in 2023, it's extremely simplified compared to past years. Now, we have an entire FAFSA playlist. We will also link to that in the description. Again, make sure you check the description. I've got tons of free resources for you there after this video. But again, the only way to access this money is by submitting FAFSA. So I could tell you the terms of what the Stafford loans were back in the early 2000s, but what I want to focus on instead are the current loans that people call Stafford loans. So we're just talking about unsubsidized and subsidized loans here. So when we're talking about subsidized, these are available to undergraduate students with financial need. And the cool thing about subsidized is that actually the government pays the interest or covers the interest while your student is still in college. So this means that when they graduate college, the amount they borrowed is the amount they owed. Whereas unsubsidized, they actually accumulate interest from the minute that they're borrowing it. Same with private loans. So pretty much subsidized loans are the only ones where they're not accumulating interest from the minute they borrow, or the interest is being covered. All of the other types of loans, the interest starts building up, and then once they graduate, it's actually amortized, or it's added into the balance at the end of their degree, and then they'll be paying pretty much interest on interest. So that is how most loans work. But subsidized, they at least at the end of college, what they borrowed is the only amount that they owe. So if they borrowed $20,000, that's what they're owing, and now that's what the interest is being calculated on. Now, this is only as long as your student is in school, at least for a certain number of hours. Again, I have a whole video on subsidized versus unsubsidized that we're linking to, but if they drop out or if they graduate, that's when that interest will start accumulating, or as well as the payments will become due. Now, unsubsidized, not only is it the difference with the interest, so again, the interest, your student or the borrower will be responsible for interest during college, But also the difference is that it's available to graduate students and it can be available regardless of financial need. Or, I mean, we still have to submit FAFSA, but it's not awarded only to those who have low income. It is more broadly accessible to families that submit FAFSA, even if they make a moderate income level. Now, as far as how much money we can get through these, it really varies depending on what year your student is in. So the later that they're in, the more money they can actually receive, and also whether they're dependent or independent. So, for example, a first-year undergraduate can borrow up to $5,500. No more than $3,500 of that can be subsidized. But independent students, they can get $9,500. No more of that can be no more than $3,500 of that can be subsidized. So it varies, and you can find all this information on the government's website. Now, what about interest rates? So interest rates for these, believe it or not, Stafford loans back in the day were variable, which is kind of scary, especially right now when we are experiencing interest rates going up and up and up. But the good news is that for many years now, student loan interest rates are fixed. So they will be adjusted each year based on the current landscape of things. But once your student locks in their rate, that is their rate for the life of the loan. Now, comment below, have you and your student been confused by anything with student loans? Is there any term out there that you're not sure what it means? Let me know in the comments and we can create a video answering your questions. But anything that's been confusing around the student loan process, just let us know in the comments. Now, another question might be, are these my only option? And the answer is no. Of course, that's why we do what we do. So, but that said, there are private student loans. Typically, the government-based loans, though, what they call Stafford loans or direct loans, those typically are the best terms. And also it helps because students can get the money without having to have a cosigner. But there are private loans, which typically would require a cosigner. And so we have an entire video on our best private loans for the year. We will link to that. This was based on our own research and experience with the companies on how they treat their borrowers. So you can check out that video as well. But then, of course, another alternative is no student loans or finding debt-free money to slowly replace what we have to borrow. And that's where I want to invite you to attend my free training where I cover my 6 steps to securing scholarships. It'll teach you and your student how to build a list of legitimate scholarships. And one family, in fact, they found us after freshman year in college or during freshman year in college, but after they already borrowed $9,000. Now, after following all of our other tips, they got to where sophomore year, they were able to break even, didn't have to borrow a penny. By junior year, she actually had an overage check. So this is not over once your student goes to college. You can actually change their situation if they had to borrow for their freshman year. So just know it's not over once they graduate from high school. But again, make sure you check out that free training because the earlier the better for getting this money. Maybe we can even avoid borrowing at all. Okay, so that said, hopefully I didn't confuse anyone. Stafford loans, it's kind of a term that's interchangeable with direct loans. They're the same thing. It's just that there used to be an actual Stafford loan. That term it's not official anymore. It is just direct subsidized and direct unsubsidized loans, but you will see the term. So we wanted to make sure that we address that. All right, again, make sure you hit subscribe because we've got tons of strategies for you and your family on how to pay for college without these loans, but we will also make sure you're taken care of if you do have to borrow. I will see you in the next video.